Tomorrow claims in a few minutes. Oil lower on the idea OPEC Plus is going to boost supply at a meeting on Sunday. Goldman Sachs reaffirming a bearish outlook for oil. Wawa fill up the refined product 320 this morning. Airline segment, United plans to increase daily flights to 15 cities starting in January to help out passengers of Spirit in case that carrier goes out of business. And JetBlue is set to become the first airline to use Amazon's Project Kuiper satellite network to power its onboard Wi-Fi. This is a boost to Amazon's attempt to compete against Elon Musk's Starlink. S&P futures again right now. Up 7. We check the markets for you all day long. Right here. S&P futures again right now. Up 7. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John, thanks so much. Economic data here in 4 minutes. This is Joy. Ben McMillan with us with IDX Advisors. And I want to go into the gold angle here in a moment. But I want to explain to people like Imperial College in London is sort of like Caltech, MIT, like the grind and all. There is no grind, Paul, in London, like econometrics at the London School of Economics. Like the undergraduate course, which I've enjoyed, is brutal. It's where they weed people out. Everybody goes off to international relations. What was it like, a graduate degree in economics at the sweatshop known as LSE?
That's very accurate. Grind is the appropriate term there. It was. I always make the joke. I know what it's like to be in the LSE library, on Christmas Day. Because it's just a lot of studying. The other thing too, a lot of people don't realize is, it's probably still this way, is the end of year exam is 100% of your grade. So, so you got to show up and have a good day.
If you're me sitting there, when you get the differential equations, I just put an X to the answer and moving on.
Yeah.
That's how brutal it is. Ben McMillan with us with all that academic ability. You are tangential to Van Eck, who literally invented how modern Americans invest in gold. How are we investing in gold in 2025?
Well, I think the big conversation there is to just put gold back on the map for a lot of investors. I mean, we've had conversations coming into 2025, 2024, where a lot of clients, a lot of investors were still kind of looking at it as a less interesting asset class. And of course, somebody sent me the Bloomberg chart yesterday of foreign central bank holdings of treasuries versus gold going back to the 80s. And for the first time since the mid 90s, foreign central banks are now holding more gold than treasuries. Wow. So this is a secular tailwind. This is a powerful shift, and it goes back to the kind of the roots of Van Eck, Austrian economics. When the fiscal deficits and debt gets too high, right. When monetary machine goes off the rails, gold is the safe haven.
Quick aside, my book of the fall will be Cass Sunstein on liberalism. Cass Sunstein writing up with love for Hayek and the Austrian School of Economics. Nobody saw that coming. We'll do that with Cass Sunstein here in the coming weeks.
Ben, looking at your notes here, gold has doubled since 2023 and could double from here over the next 5 years. What's going on there?
So again, I think the big thing to keep in mind there, and we were kind of pounding this table on gold, not because we're gold bugs, but we just saw structural asymmetry in that trade. And I'm reluctant to even reference it as a trade because, again, we think it's kind of a secular change in the world monetary order. In many ways, it's kind of the other side of the bond vigilantes coin. Actually, Tom, you on the show a couple of months ago said, is the gold market sending us a signal? And it absolutely is. And it's the same signal the bond vigilantes are sending us. And unless, when you look at kind of G7, it's not just America, what's going on with long yields across the G7 nations, all of that really argues for gold as a safe haven. There's a lot of factors there at play, not the least of which, too, is I think a lot of the shine coming off the dollar. And we've obviously seen the dollar come off of a 12 or 13-year bull run. But the guest from Macquarie, Dr. Wiseman, I think summed it up very perfectly, where he talked about, dollars now moving from ordered liberty to managed chaos. And I think even that's part of people now looking at US dollars no longer as the safe haven that they once were and finding refuge in gold.
How about silver? I'm just looking at silver on my GLCL, Global Commodities Price chart here, function on the Bloomberg Terminal. It's up 40% this year.
Silver's interesting because, silver, and the Van Eck guys will tell you this, has always been kind of interesting because there's a more robust industrial use case there. And I think, in particular, if you look at the silver to gold ratio, which is, one of the dozens of indicators we look at, it was, comparatively undervalued relative to gold, historically. So there's kind of a technical basis there for an uplift. But I think also equally interesting is when you look at a lot of the Chinese demand for solar panels, which they've got Xi Jinping has big plans for solar. These are new types of solar panels that are going to use more silver going forward. So I think that industrial use case now also has a bit under it. But again, when silver and gold start moving in tandem like that, that's also the signal, that the bond vigilantes are sending us that this is inflation safe haven.
We're going to come back with Ben McMillan, IDX Advisors. Can't say enough about the academics here now. And right now, though, we have some substantial economic data coming out. Trade balance is pretty much on target. Imports explode higher, plus 5.9%. Off a previous negative 3.7. We'll get a revision on that. Non-farm productivity is better. Unit labor costs are quiescent. Claims nudge up from 229 up to 237. The 4-week moving average is a 231. Again, the 4-week moving average of claims, 231. Continuing claims do pretty well as well. I'm going to call it a jumble, is what I see here, looking at the set of data. We do this with ISM services coming out at 10 o'clock. Market not moving all that much. Let me look at the bond space, as they say, 4.19% on the 10 years. John Tucker mentioned 30-year bond comes in a solid 3 basis points. We had that 5% print a couple days ago, price down, yield up by the bond vigilantes. We're now at 4.87 on the 30-year. We'll continue here. I'm waiting for the revisions. I'll bring them to you as they come in. Across the nation, good morning to all of you on 92.9 FM in Boston, 99.1 FM, Nathan Hager Radio in Washington. Good morning, Bloomberg 1130. And YouTube, I just can't say enough about this experiment we're doing. I'm learning about it each and every day. Subscribe to Bloomberg Podcast to get all that we do, particularly in your office and at home. And particularly good evening to all of you on the Pacific Rim. The guy that advises me on this is Ray YouTube, and Ray's based in Hong Kong now because the growth in Asia of what we're doing is humbling. Ben McMillan with us here for a couple more questions. So you got a price moving up. What's the persistency of gold held at central banks? Like, is that a forever hold? Or do you sit up at night and go, OMG, the Banque de France is going to sell?
Well, that is the big question. And that's one of the reasons we're more secularly bullish on this kind of shift in the demand curve is because, again, if central banks are buying at this rate, that's a shift that's unlikely to turn around, anytime soon. This is, they're selling treasuries, they're accumulating gold. This isn't a bet that a speculator is making. Or even if you look at ETF flows, that's obviously more speculatively driven. This logistically looks and feels much more secular in nature.
We mentioned Van Eck earlier. The heritage folks, it was like John Templeton in global investing. This was all new, odd. John Van Eck invented it all. And at that time, mothers held Krugerrands in their dresser drawer. Are we back to that emotion?
I think so, to some degree. And you're in the conversations we're having with clients, I had a conversation with a client yesterday and he's talking about, buying 10-ounce silver bars. And so, there is a very
at Costco.
At Costco now. Exactly. So that's very much back in the zeitgeist of just kind of holding, American Eagle coins or silver bars under the mattress, so to speak.
Is there never too much econometrics?
I can attest. There's absolutely too much econometrics.
Folks, this is a joke. We're making jokes here, but a lot of this comes out of the incredible academics. Good morning, Canada and British Columbia. But a lot of people look at this stuff, and I've talked to Engel about it, the Nobel laureate at NYU, Robert Engel. But I really wonder the value of the micromathiness of econometrics in the day-to-day grind.
Well, I'll tell you, Nobel laureate, Robert Engel. That was part of my thesis at LSE. For those that don't know, he was instrumental in developing a kind of a novel volatility model, and we still use derivations of that in our models today.
Use Garch every day.
Absolutely.
Every day.
Absolutely.
I got goosebumps, folks. I can remember when I was going down in flames with Garch. We'll have to see. Ben, this has been brilliant. Don't be a stranger. Ben McMillan with us with IDX Advisors. Can't say enough about the interesting dovetail here, what's going on in gold and going on in fixed income with yields up. As John Tucker said, yields today a little bit quiescent after 2 days of